Bitcoin is ahead of stocks and will probably bottom before stocks, maybe late in 2023, where stocks might be mid 2024, because it's kind of the leading sector. It happens in bubbles. I've now studied, since these bubbles came, all bubbles in history. Bubbles basically go back to where they started. They bubble up way beyond the fundamentals, crazy, and then they go back to where they started. That is 3250 to 4300 on Bitcoin. That's where it should go. And then you buy, because it could go, literally, the projections also tracking the dot-com bubble before the real boom. It could, Bitcoin could go to 500,000 to 1 million. My actual target right now today is the next boom will take it to a peak of 780. The bubble and the burst in the dot-coms is now 22 years later. Crypto will bottom around its late 2018, early 2019 lows around 3250 to 4,000. It goes up more, it goes down more. It's already been down 70% when stocks were down 34 to 38 on the NASDAQ and 25 to 27 on the S&P. I am predicting that, and I'm just following the same bubbles in Amazon and dot-coms. I'm telling you the same exact proportions. The dot-coms were the next big thing emerging in the late 90s in that bubble. They were small. The shakeout, which is necessary, Dan. This is a good thing. You have tons of new entrants, and then you shake them out to the ones that are really strong and have their stuff to get out. So it's still, even at 16,000, down 70%, it will be down 95% if we do the same thing we did with the dot-coms. So it's not time to buy crypto later, but I also advise crypto is the next big thing. That's what the shakeout's for. That's what happened, back in 2000, and then you see the real boom, okay? So the best companies will survive. We have 40,000 coins by some count. This is ridiculous. All they are is cheap IPOs. Coins are cheap IPOs. The blockchain technology is real and will emerge after we wipe out all these ridiculous coin companies. So Bitcoin will survive. Ethereum will survive. Most of these companies will not survive. I would be looking to buy the leaders, Bitcoin, Ethereum, companies like that at the bottom. And I'm not looking for a bottom until we retest those lows in late 2019. That's also an Elliott wave count. That was simply a huge bubble. It was simply the fourth wave correction before the fifth wave final bubble. What's the best analogy for this? 2008 was the first bubble and the first burst, and it did not go through like 29 to 32. The point is, though, all those new companies can't make it. You have to shake them out. So this shakeout stage, which we're in and we'll be in for a few years, is important also. So you have to buy the winners at the bottom. And I'm going to tell you, Bitcoin's going to survive this. Ethereum, it didn't erase the full bubble. Government stepped in and stimulated extremely hard and did it for 13 years until recently, okay? So they stopped the bubble from bursting, okay? So we have to go back and wipe out this bubble. Bubbles are not bad. They basically help launch a new sector and raise a lot of money for a lot of new companies. Many companies, there might be 10 or 12 really solid companies that are going to survive this thing and have an incredible boom for the next 15 years. And that's what the dot-coms did. But most of those dot-coms, remember how many dot-coms there were? There was a dot-com for every name in retail possible. Street. I'm just looking at exactly what happened in the last bubble. And this is now clearly been a bubble of similar magnitude. Why would you expect anything else other than a 95% crash? But that's what happened last time, including the leaders like Amazon. Well, this is not momentary. Everything's going down. Some companies just go down more than others. Dog.com, Chat.com, whatever, and they all went under except the best ones. And the best ones then changed the economy. We're all online now, and it's a giant industry now. So this is the way the economy works. There's nothing wrong with it. When people say this can't happen or not, they haven't studied history. So the number one, the first sign, when we're getting towards the bottom here, let's say in mid-2024, and the NASDAQ is down enough to say we're near a bottom, like down 80 to 90% instead of 40 to 50 to 60. Very simple. I'm not going to analyze 40,000 companies and down to the 1,000 that might survive this, or a couple hundred, and then pick the best one. That's too much work. I'm just going to buy the leaders and then look at how the stocks have performed on the way down to maybe refine that. But it can be that simple. But if somebody said, what do I do? Okay, I'm going to buy Ethereum and Bitcoin in early to mid 2024, maybe late 2020. Then you start like, okay, whichever company's held up the most. If a company like say is only down 80%, well, it did a lot better than the companies down 90. But you also always look for the companies with the strongest market share and dominant. Nobody is taking out Amazon, okay? Amazon is the biggest, most diversified retailer in all of history. It would have been the Sears of the 50s and 60s boom, okay? And so Amazon is gonna survive. And for me, it's because I think if somebody said today, you have to do it and can't change your mind, that would be what I'd say today. So just look at it and refine that in the future. But you don't have to be complicated about this. You can pick the best stocks. That's a lot of work. I'm looking at the whole world and all major sectors and countries. I don't have time to decide if Krypton is gonna beat Bombaton, okay? I don't have time for that. So I've covered being 100% short 3 times. Then I have 60, 70% capital on the side to take advantage of opportunities that pop up. When there's a downturn, there might be a distressed house down the street from me that I can buy for 20 cents on the dollar and then fix it up and turn around and sell it in a year. Okay, well, I would have capital to do that sort of. I would buy particular stocks at the bottom, but right now in the downturn, since everything goes down so much, I'm just playing this by being short. SQQQ, that's 3 times the NASDAQ. Now, the reason I'm doing that, it's 3 times so I can keep capital on the side. So that's the way I'm playing it. I don't recommend in an already volatile downturn that people be triple short. That's for traders, but that's my strategy. I do the triple short with a small part and then leave the rest to adapt. The other thing we have to realize here, although everything's following like past booms and bubbles and stuff, this is unique because never before have governments created and then also fought the bubble assets. That's what they buy when they inject money. They buy financial assets, inject more money into the whole pool, and all financial assets go up. So now we have an everything bubble. So everything falls, and then things will more selectively emerge in the next boom once we've shaken out this first. The Roaring 20s bubble was a natural bubble. Even the 90s bubble, tech bubble, the first tech bubble was largely a natural bubble. You get storing, tech's doing really good, ripping off on its 45-year cycle, new technology moving mainstream, the speed of light, and investors just overvalue it. They always will. This time, it's all been government stimulus, pouring money in the financial bubble. So right now, the best thing I can do, I don't want to short everything. I'll just be short the NASDAQ stocks, which is the lead stocks to me in the stock area. So that's the way I'm playing it. Somebody more sophisticated can pick more stocks or different sectors. I'm just being short at the bottom. But again, all types of things could pop up in between, and I've got money to jump on something more short term if necessary. I could do that one time short with all my money, or I can do it with a third and leave the other 2/3 to look for opportunities if they come. That money's going to be there regardless to buy at the bottom. But again,